the fact that the Clarity Act is moving forward is really good for crypto. Crypto really got hurt October last year, so it is our view that we're going to have a pretty big recovery as we put more time between that moment. And so we like Bitcoin. We do think it's going to make a new all-time high this year, and we're probably more favorable towards Ethereum, and we expect the Ethereum to outperform Bitcoin.
Over the past decade, financial markets have undergone a transformation that very few investors truly anticipated. What started as a niche experiment with Bitcoin has evolved into a multi-trillion-dollar ecosystem touching Wall Street, global payments, consumer brands, and even intellectual property. In today's video, we're breaking down Tom Lee's latest insights, covering the future of blockchain dominance, Ethereum's growing role, tokenization, stablecoins, Wall Street adoption, and why he believes both equities and crypto are setting up for a powerful year ahead. One of the most important points Tom Lee makes is pushing back against the idea that blockchain is a winner-take-all market. Unlike social media platforms or operating systems, blockchains serve different purposes, audiences, and economic functions. Before we go on, just a quick reminder, liking the video, subscribing to the channel, and commenting helps this reach more people who care about Bitcoin and macro trends. Appreciate the support.
I think there is going to be room for multiple blockchains. Ethereum is the largest blockchain in the world. It is almost 70% of all tokenized assets are taking place on Ethereum. And Ethereum is extremely resilient. It's had 100% uptime since inception. The only blockchain smart contract platform to have never gone down.
Right. But I guess there are differences, and each has its, people that think that there are certain features about Solana that are better, people that think that there are certain, and it gets very arcane, and we get down into a rabbit hole. So what would the future look like for the digital tokens that Mr. Beast that would be traveling across the Ethereum network? What are we talking about? Just describe it and how it would work.
Well, I think it's really going to be up to what Beast Industry unveils. So, I think if I was to imagine things that'll happen, number one, we know that stablecoins have become increasingly mainstream. It is really the breakout product of 2025. And we also know that Wall Street firms like BlackRock and Robinhood want to tokenize almost everything from stocks to credit to real estate, and eventually things like intellectual property and even loyalty points. I imagine that those are the kind of products that could be emerging on any future services platform. And that's where it's going to be a natural fit between a company like BitMine and what Beast Industries does. But from BitMine's perspective, Beast Industries, is a very unique company. I mean, for us, I think as just an investment and, being part of the cap table where there are some really high quality venture capitalists and other investors represents a good investment opportunity for us, or what we call a moonshot.
Can we just get your viewpoint on the January stock market action in the S&P and in crypto? And is it, I think right now it's kind of going along in the way that you told us it would at the end of last year. At least I think we were down around 80,000 on Bitcoin. That's recovered. The stock market started out pretty strong. It's had a couple of rough sessions, but you expect pretty good gains this year after a mid-year slump.
I do. On markets broadly, I think it was good news that the first 5 days of January was positive. It's a really good omen for the rest of the year, and I think it puts upside to our 7,700 for the S&P 500. I think some of the turmoil in the past couple of days in financials and the broad market, along with crypto, do reflect how policy, especially Washington, picks winners and losers. As you know, Washington is trying to cap credit card rates. I think that that's going to hurt financials if this is implemented, because it's going to reduce their ability to offer credit to many types of consumers. But at the same time, the fact that the Clarity Act is moving forward is really good for crypto. Crypto really got hurt October last year. So it is our view that we're going to have a pretty big recovery as we put more time between that moment. And so we like Bitcoin. We do think it's going to make a new all-time high this year. And we're probably more favorable towards Ethereum, and we expect the Ethereum to outperform Bitcoin.
This is interesting, Tom. Someone wants to know, you haven't reached 5% yet on Ethereum, and you're making this weird investment in their view. Can they trust your strategy for BitMine?
Hopefully that investor tunes into our stockholders meeting today, which we are streaming from Las Vegas. Okay. There, we're going to unveil our 2026 strategy for BitMine, which has 4 pillars of growth. One of them, of course, is getting to 5% of Ethereum and optimizing the yield. But it's going to be natural for BitMine to also productize its platform. So working with Beast Industries and Beast is a way for us to productize the huge community of BitMine.
Last year's crypto underperformance wasn't organic. It was structural. Until October, Bitcoin was up 33% and Ethereum was up 40%. Then came what Lee describes as the largest deleveraging event in crypto history, even larger than the FTX collapse. Over $1 trillion in value was wiped out. More than 2 million accounts went to zero. Market makers and exchanges saw balance sheet damage. It was systemic. Historically, after events like this, crypto markets take weeks or months to stabilize. After FTX, it took 8 weeks before recovery began. By that logic, December marked a potential bottom.
At Fundstrat, we first wrote about Bitcoin in 2017. And let's look at how Bitcoin has, and at that time we said you'd want to own 1% of Bitcoin. And let's see how it did compared to other assets. And a lot of these other assets I would still own, but as you can see, Bitcoin in that time period that's passed has gone from $960 through September 26th, which we just want to record before the liquidation event, 109,000. That's a 112 times return. It outperformed NVIDIA, which went from $2 to $178, which is massive already, 65x. It beat NASDAQ. It beat gold, which went from 1,100 to 3,800, and it beat the S&P, which went from 2,200 to 6,600. So if you put 1% into Bitcoin, that was a good insurance bet because it really crushed everything else. But Ethereum did even better. You can see Ethereum went from $8 to 3,900. That's almost a 490 times return. Okay. But last year, crypto kind of disappointed. You can see gold did great, the Mag 7 did well, NASDAQ did well, S&P did well, and you can see Bitcoin and Ethereum actually were down for the year. So in some ways, it made many people wonder, is a crypto winter started, or was even last year a crypto winter? Keep in mind that crypto was doing great until October 10th of last year. So Ethereum was up 40% and Bitcoin was up 33%. But then we had the crypto mass liquidation event. $1 trillion of value was wiped out. As many of you know, it was the largest deleveraging event in the history of crypto, even bigger than what happened with FTX. And they estimate over 2 million crypto accounts were wiped out, went to zero. And many market makers and even crypto exchanges had their balance sheets hurt. So the industry, since October 10th, has been limping along. In 2022, November 2022, when FTX collapsed, it took 8 weeks before the market began to show signs of life. So if you asked us this year, it's a larger event, but when would crypto begin to maybe find its bottom? It would be December 10th. And, post-October 10th, as you can see, Ethereum fell basically by half, and Bitcoin fell by 36%. So here we are, but if you kind of squint, you can see since the late December, Bitcoin and Ethereum have begun to claw their way back. Okay. Now, think about that. It was the largest liquidation event in the history of the crypto industry. So, crypto treasuries were built to go public and outperform ETFs by buying crypto. And since October 31, only 2 crypto companies bought any crypto in size. MicroStrategy, from December 31 to the end of the year, bought $2.9 billion worth of Bitcoin, which is a lot. Metaplanet bought $330 million of Bitcoin. And among the Ethereum treasuries, only 1 crypto treasury bought any Ethereum, which was BitMine, which bought $2.4 billion worth of Ethereum. And in fact, 2 Ethereum treasuries actually sold Ethereum. Okay, so if you think about accretion by buying ETH accretively or buying Bitcoin accretively, it's only 2 companies. If you're going to think about Ethereum's price, you should think of it as its relative importance versus Bitcoin, because the ETH-BTC ratio is essentially saying, is Ethereum doing better than digital gold? And as the ratio goes up, that means smart contracts are more valuable than digital gold, and so that's how you should think about that price ratio. And currently, Ethereum to BTC is 0.03463. Okay. In 2021, that ratio was 0.08727. In my opinion, and many opinions of the team here at BitMine, Ethereum is more useful now than it was in 2021. I mean, the fees have come down. The amount of developers has expanded vastly. A use case has massively emerged, which is stablecoins. And now there's tokenization. And of course, there's going to be a bridge into the consumer through things like Beast Industries, right? So, in fact, Standard Charter, which is, we think, we've seen a lot of Wall Street research. I think Jeffrey Kendrick does some of the best work. He says 2026 is the year of Ethereum. He sees the ETH-BTC ratio returning to its 2021 highs. Okay, so he's using that metric. Okay, well, let's think about that ratio. There's 3 sets of columns here, okay? See the middle set of green? Okay. Yeah, I mean, it's a little hard to see on the screen. So that's the 2021 high ratio, 0.0873. And then we put a little horizontal line because we expect Bitcoin to get to 250,000 this year. So if Bitcoin gets to 250,000 and Ethereum trades at its high relative to Bitcoin, Ethereum's at 22,000. And it's currently 3,200. So you see the massive upside in Ethereum.
Tom Lee's message is clear. This isn't about chasing hype or timing tops and bottoms. It's about understanding structural change. Bitcoin remains the ultimate hedge, digital gold in an era of uncertainty. Ethereum, however, is becoming the operating system of finance, powering stablecoins, tokenized assets, consumer platforms, and institutional settlement. The market was shaken by the largest liquidation event in crypto history, but history shows that periods of forced deleveraging often create the strongest long-term opportunities.